Hey there, this is Kat with Stand Out and Grow, my live podcast. I'm here today with a very special guest to talk about business credit. I think this is a topic that everybody can relate to, especially now in regards to how the economy is, how we're coming back from COVID and what have you. So I don't think I know anybody who isn't in a pinch or could use some help, right? Could use some help. I'm excited to have this guest on. I met him at a local event and really was interested in learning more about his business. And so had a meeting, talked to him, and now I want to introduce him to you. So let me bring him on. And just for housekeeping rules, if you are tuning in, please drop me a comment where you're tuning in from. And if you have any questions, please drop those in the comment below. And I do look forward to us responding to those. So without further ado, let me bring on Andy. Hey, Andy, how are you today?
I'm doing just fine. Pleasure to be here.
Yeah, awesome. So let's talk about first. Let's get you to introduce yourself to my audience. Just give them a little background about who you are and what are you doing.
Sure. Yeah, fair enough. Andy Cervenka, I'm a regional managing partner with J Galt, helping businesses build business credit. A little background on myself. Lifelong Wisconsinite, born and raised in the beautiful Northwoods. Butternut, Wisconsin is my hometown. Kind of bounced around the state. Spent the majority of my career in the automotive industry. The last 10 years as a territory sales manager, and a lot of nights in the hotels. Needed to change. I now have a 4-year-old and a recently turned 1-year-old, which really sparked me getting off the road and being home to take care of the family. So came across J Galt, really dug into what their mission is with helping small businesses, and it spoke to me. Selling to small businesses for 10 years. This is something truly that I can make a big impact on their financial well-being and their growth. So I was happy to join the J Galt cause here back in December of 22, and haven't looked back since. I've been really enjoying it.
Okay. And what's the biggest mistake that businesses make with credit?
They think business credit happens automatically, and it does not. It really has to be done with intent and knowledge, and that's where the J Galt platform comes in with the help of our credit analysts that are assigned to each member that works with us. Just getting the foundation set on the corporation, whether it's an LLC, S corp, C corp, what have you. As long as you have that EIN number, not a sole proprietor, because that's got your personal social attached to it. But if you set up a standalone corporation, LLC or higher, that profile can have a lot of benefit to you when you build it in the correct way to get to the point where you're no longer signing personal guarantees for financing. So it's a very powerful tool.
Okay. And when you say personal guarantees, you're talking about personal property like their home or land or something that they personally possess, right?
That is correct. Yeah. Anytime you're signing a personal guarantee, you guarantee that note is going to be paid in full with everything that you own or could ever own until that note is repaid. So having that separation, reinstating the corporate veil, the corporate shield, which a corporation is supposed to give to you in the first place,
Yep.
that gets torn down when you start signing personal guarantees, and you're just exposing yourself unnecessarily in our eyes.
Yeah. And that makes sense because at the end of the day, I know a lot of different kind of bankers and what have you, and all of them have their way of doing business. But I know that one of my mentors says that if whenever you're getting into some kind of loan or situation for your business, it shouldn't be tied to your personal property. It should always be tied to the business. That was the whole reason behind getting your LLC or Inc. or S Corp or whatever it is that you got to incorporate the business so that it's separate.
Correct.
Correct?
Yeah. Yes. Very, very correct. Yeah. The way it's conditioned now with a small business, you start a small business, either bootstrapping it or getting an SBA loan or a traditional bank loan,
Mhm.
what have you. You're starting from essentially nothing, and it does require you to start off with personal guarantees. But then when you get it built to the certain point, you should have that separation. And unfortunately, the way that all traditional lending that any small business owner would go to seek, they're all conditioned to say that's their risk management is needing a personal guarantee to cover their assets, cover that amount. So building business credit to the point where it's corporate credit, corporation credit on the EIN is that true separation, and you're never having to worry about where funding's coming from, or obviously the personal guarantee aspect, but also just the amount of funds available on business credit, corporate credit profiles is generally 10 to 20 times larger than anything that can be secured with a personal guarantee. So it's a phenomenal growth strategy.
All right. And people can actually buy things if they establish, right, this business credit, this business strategy that you're talking about, where they're establishing, I guess, what do you call it, where they can essentially borrow money, right, on the business thing. Yeah. Yep. And there's something I was alluding to with this. But okay, so let's talk about, okay, we talked about why, right? Why you need the credit. And then the next thing would be is you can buy things off of this for your business, because that's the whole purpose of getting this business credit and establishing your business based on the business credit. I think the confusion gets with people is they use their personal credit cards, right, to fund their. And I'm sure you've heard all of this. I'm sure you've been a part of a lot of conversations and things that business owners do, right? I mean, because I know for a fact I started my first business on a bunch of credit cards. I paid them all off, but that's like a 23, right? 12 to 23 inches, right?
Yeah, most definitely. Yeah, it's a great way to get to that point. And unfortunately, when you're talking credit cards and things, even if you start getting into the realm of business credit cards, that's generally not always reporting to any of the business credit bureaus. I mean, you look at some institutions within some certain banks, even like they have some business credit cards that do report to the business credit bureaus, but majority of them, 93% of the vendor accounts, trade lines, credit cards, fuel cards that business owners have available to them, which are thousands of options, 93% of them do not report to business credit bureaus. So that's where our service and our expertise comes in, not only with setting up the foundation of the corporation properly to qualify for all these things down the road, but then also getting access to ones that do report, because within our platform, we have 400 plus different lenders and vendors and credit cards that we know to work with us, they have to tell us where they report, which bureau, and what their underwriting criteria is to get approved. So you're going to apply for a business credit card that you're going to get approved for, instead of having those dings against you. Because when you're talking business credit cards, a lot of them still require a personal guarantee. You look at personal credit and things, but it's stepping stones to get to that point where you have corporate credit cards, and then corporation credit cards where there's tied to the EIN alone.
Yep. So what would be the beginnings of this? Because if you're working with, I'm assuming you work with the businesses one-on-one, and if you're working with them and the business, let's say per se, doesn't have a business credit card, I mean, how are you guiding it? Can you walk us through like some of the steps?
Yeah, of course. It's a 7-step process that we have perfected. Essentially, we've helped north of 43,000 small businesses build 1.3 billion in corporate credit, not tied to the owners. So it's a tried and true system there, but it also starts with the foundation. Step one is helping comb through those 125 data points that LexisNexis, that large conglomerate corporation out there, has available for institutions to look at. So it's getting those 125 data points set, all the boxes checked. I mean, simple things like business address matching everywhere. You're not operating out of a PO box. You have just a simple one-page website, and you're operating a professional email. So it's not at Gmail, at Yahoo. It's all these things that they look at to check mark the validity and fundability of this business in the beginning. And then after those are all checked off, working with our analysts, you then move into step two is registering with the 3 credit bureaus. So Dun & Bradstreet is kind of the granddaddy. Everybody knows who that is. And they give you a number as soon as you incorporate with that EIN. They send that to you, and but you still should go into their platform and make sure your portal and profile is set up correctly. No mistakes on the address. And then the other 2, Experian Business, Equifax Business, separate from the personal sides. There's the business side. Those you have to go into their platform and register for your profiles as well. So when you start utilizing accounts that are reporting, then there is a place to capture all that payment data.
Yep.
So, and then from there, it's the simple process of utilizing our analysts and our portal to navigate through the tiers of building business credit, because business credit in itself is scaled on 0 to 100, and there are 4 tiers to that. So you have to start at the bottom, start at tier 1, mostly net accounts, net 30, what have you. But utilizing those accounts to pay for expenses rather than just signing writing a check or a business debit card or what have you to pay for these things. So utilize these accounts that we have in our platform that you can qualify for to pay for monthly expenses. And then it's just simple as funneling expenses through there, rinse and repeat. You're graduating, tier 1 graduates to 2, which starts getting into extended credit lines and business credit cards and things like that, revolving credits. And then tier 3, you're looking at corporate credit cards, which is the final step before, before tier 4. When we help a business get to tier 4, 80 plus scores on all 3 bureaus. We do that within a year. That's our guarantee. We'll get you there in 12 months or less. But then you're accessing that lending network that does operate on non-recourse lending, no personal guarantees. So we're kind of the start to finish on building business credit profiles on the three bureaus and getting the business owner to that point where they can then buy vehicles, buy equipment, purchase properties. That corporation is a legal person, so it can lend money to another new corporation. So if you're looking to scale and open up a second location, that you can lend that money from the one credit line to a new business and just keep growing and scaling that way without having to tie yourself into everything personally.
Okay. Now I remember what I was going to ask you, because I was like, it came to my head. Okay. So I remember you saying that it's bad to have personal debt, but it's good to have business debt. Do you want to talk about that a little bit?
Yeah, business. It's not necessarily that we're having businesses operate on debt, essentially, but building credit, requires credit lines and some debt to be amassed and accrued, and then the more things reporting to, even like your personal credit, you have 6 credit cards reporting to your personal profiles, all good. That's how scores build.
Yeah.
So having about 12, different vehicles reporting to the business credit bureaus is how we get it done and scaled through the tiers. So it's not necessarily that we're asking to operate on debt. Paying invoices off early on time is always key with building anything. But then when you get to that point where you have that separation, operating on debt is how every major corporation in the United States operates. I mean, you look at somebody like Walmart. They're operating 400 plus trade lines a month to keep their business credit profiles large enough so that when they want to open a location, it goes as smoothly as it can. I mean, no CEOs or board members are ever signing personal guarantees. Well, this is how they do that. They have the back room. They're taught at a young age, I think, in those Ivy League schools on how to do this. And it's a crying shame that the small businesses of the United States do not know this. And that's where we have come in to bridge that gap and show them how to accomplish this.
Okay. So I wanted to make sure we talked about that, because having business credit, debt, whatever you want to call it, really solidifies your business, and it helps you or you're able to borrow more money, or, if you get into that situation that you need it. But it puts you in a position where you now have a lot more strength, whereas before you would lean on your house or your credit cards or what have you, that you shouldn't be doing, right? Because if you listen to any of the influencers or thought leaders in the business world, they'll tell you, don't use your own money. They keep saying it over and over. Don't use your own money. And I think sometimes people confuse that with your credit cards. And that's still your money.
Yes, it is. It's still everything you own is tied to that. So yeah, it's that true separation is at the crux of it, to help the business owners optimize their cash flow for things they're already spending money on. You're already spending money on these expenses. Let us help you connect the dots to make it matter. In the long run. I mean, even we didn't even really talk much on the benefits of having it when it comes time to sell. Or pass it along to another family member or employee.
Well, let's talk about that, because we should.
Of course. Yeah. So I onboarded a marketing agency earlier this year who had a 10-year plan to exit. he wants to grow in that 10 years, of course. So building business credit will help him seize those opportunities and grow. But not only that, right now, as it stands, in 10 years from now, one of the employees wants to take it over. So at that time, building this credit along the way, when he wants to exit, name that employee a partner in his corporation, so
Yep.
she has access to those credit lines. She can draw from those credit lines, pay him to leave and retire, and
Yep.
that saves her from having to take out that giant SBA loan or bank loan that's personally guaranteed, and saves her the headaches.
Okay, because that's a great point to make, and I love it because I know a lot of businesses do. One option is to sell to an employee, you
Mhm.
know, or to sell to a family member, which I believe would be the same scenario in that case as well.
Yeah,
So it has a lot of value and weight when that time comes, and it makes it a little more attractive because
most definitely. Yeah, yeah,
yeah,
yeah. You
yeah,
go to sell, and say you own a mechanic shop and you
yep,
want to sell. You've been operating on business credit, and so you've then had the cash flow to keep the facility up, all new equipment, tools, what have you. Not only that, but that, like I said, that credit line stays with the EIN. So if company A built business credit and they have a phenomenal mechanic shop, and company B across town is going up for sale, they've been personally guaranteeing everything. I
yep,
mean, as a potential buyer, I think I'd take the one that has no personal guarantees attached to it, and could be a hefty chunk of change attached to that EIN.
right, right. And a business line of credit, is part of this mix. Is that correct?
Yes.
Am I
Yep.
correct?
Yep.
Okay, thanks.
Business lines of credit.
Because I think sometimes people get confused and they don't understand a business line of credit is a cushion. It is a
Mhm.
cushion because if let's say you're dropping invoices on the 15th and you're paying vendors on the 1st, it's that cushion in between because you're not going to get paid between the
Yep.
vendor payments and your dropped invoices. So,
Yep.
that's all it's providing you is that ongoing cushion that you might need so that you can pay and help, make the business still function without waiting on those payments, right?
Of course, yeah. Accounts
Yeah.
receivable financing, book of business financing. I mean, all these financing vehicles that are available to business owners out there with some form of personal guarantee are also
Yep.
available strictly on business credit lending, and that's where we've amassed a 100 plus, I think, lending network out there outside of traditional banking that
Yep.
we introduce all of our business owners to at the end of this process when we have those profiles built, where they can I need to buy a new piece of equipment. Okay, we'll look at these 5 lenders. They do phenomenal work on equipment lending. Shop the rates, find the best one. Oh, by the
Yep.
way, you're not signing for this personally. Your business is signing for it.
Right, right. And that's fantastic. Okay, so let me now take you even further. How, like, if someone has bad personal credit, can this actually happen for their business?
It can, yeah. I mean, it's always good to be working on the personal side, and once you start working, if you decide somebody decides to start working with us, in the mid to high 500s, I run into it a lot with business owners. It happens. You get into a
Yep.
bad spot and you're stretching yourself too thin, but being able to in the beginning start shoveling expenses off of what might be a personally guaranteed or even just a personal credit card onto the business, so it's helping free up your personal credit lines to lift those scores. Yeah, it should be worked on together. I mean, there's no you will need to have a decent credit score when you start getting to the late tier 2, tier 3, because business credit cards are your cosign for a business credit card in
Yep.
the beginning. So you need some decent personal credit, but working with us help offloading some of those early expenses, getting your personal credit freed up as much as possible to help lift those scores is a great way to do it at the same time.
Okay. I mean, I think if anything, if you're learning to build and establish business credit for your business, then you're going to be learning functionality of basically of what your own personal credit should look like as well. I mean, at the end of the day, everybody should be improving their personal credit,
Yep.
because
Oh yeah.
maybe one day you need it for your personal self.
Yeah, of course. Yeah.
Yeah. I mean, uh, it happens and we don't know and things are, moving and evolving.
Yep.
Okay. So let me see. Okay, so you talked about that is this a subscription? Is this a one-time service? Tell us about like how this works as
So
far as
with Okay, yeah, I'd love to. With the J Galt program, we do have a core membership, which is a 1 year subscription with us. Guaranteed, we'll get you the top tiers of business credit in 12 months, or we'll continue to work beyond that first
Yep.
year until that happens. But that's working through our platform. We operate on a SaaS platform, but you get the platform, the dedicated credit analyst that's walking you through this program, and then access to that lending network. So
Okay.
that's the core membership.
Yep.
Our lifetime membership is a 1 year or a one-time fee up front, but then you've got us for the lifetime of your corporation. I mean, so that's what included with the core membership: the business credit building, the credit analyst, the lending network access, and then on top of that, we have cash flow management software, yearly business valuations. It just opens up the door to other services provided on the back end, our back end office team, monthly access to meetings with the business attorneys, CPAs, or excuse me, fractional CFOs, MBAs. So anything that you need for growing and scaling your small business is accessible through our lifetime service package. So it's
Okay.
pretty phenomenal.
Okay. And that sounds great because, I mean, if a business is trying to gain capital to grow, I would imagine at some point their plan would be to exit at some point.
Right.
And to exit, you would have to have a positive cash flow, and understanding and knowing what that is important to the business and to the brand. And I think a lot of times people relate that if I generate this much revenue for X amount of years, and I should be able to sell my business. Well, no, not if you don't have cash flow. Nobody wants it. Do you know what I mean? Am I right, Andy? Like
Right. Very true.
people
Very true.
people are looking for businesses that have cash flow, and if you don't understand the dynamics, I think that's a great addition that you guys provide as part of the service. And then you also said you guys do some sort of business valuation as well, right?
Yeah.
Yeah.
Yearly business valuations to gonna give you the scope on year over year. But then also I talk a lot about there is a section of that report called the insurance valuation report, which you probably are familiar with. So based on the KPIs X, Y, and Z, you need this much workers' comp, you need this much
Yep.
umbrella coverage, all that stuff. Something that's provided to you yearly, so you can take that whenever your renewals for insurance come around. Take that to your agent.
Mhm.
Hey, am I covered year over year? For a business that's growing, that can vastly change year over year, and you want to make sure you got enough insurance.
Oh no, definitely, definitely, and that makes an interesting story because I went through the transition of going from one insurance rep to another, and at one point I was like, "Do I have insurance or don't I? I don't even know," because I was in between two insurance reps, and I was like, you know what I mean? So it can be
Yeah,
very confusing and really awful because, as Andy alluded to, if you're not insured and something happens, that's not a great place to be at,
right,
right?
right,
Yeah.
right. Yeah,
And
yeah,
especially on your business if you have a more high risk probability of your business as well.
yes.
Um, well, very cool, very cool. Okay. Is there anything else that you wanna share that you guys are doing that I'm not asking?
Yeah, I mean, for any listener out there that's interested in where they might stand today with their business credit, I am hosting free one-on-one consultations. Kind of hear about your business, have that business credit report run at that time to take a peek at it. There's definitely, yeah, that's just an added benefit right off the get go. There are things that I haven't really dove into here too much. Off into the weeds too much, but there are a lot of different ways to think about utilizing business credit that I haven't touched on, but would love to have the chance to explain it more one on one in a scenario with anybody.
Okay. And that website is that do I have it correctly? You might
That
wanna
is
spell
correct.
it you might
Yep.
wanna spell it out for our audio
Sure.
podcast.
Yeah. So www.jgalt, that's JGALT.io/ACERVENKA. So A Cervenka.
Yes. Awesome. And then if you did not catch the link or you didn't write it down correctly, you can also connect with you on LinkedIn. Is that correct?
That is correct. So, yep, Andrew Cervenka, CERVENKA.
Yes. So if you're on LinkedIn, make sure that you connect with Andy. Also, he's known as Andrew Cervenka and on LinkedIn. So just make sure you check him out there. I will also tag him on the post so that you guys can connect to him. But I see this as a great opportunity. I'm a huge proponent on businesses should be really on top of their finances and understand their numbers. I'm a big proponent on understanding your numbers. This leads into so many things that is a vantage point for you or a disadvantage point for you, because if you can't get, credit, that's a problem. And you should probably reach out to Andy to find out why, because it
Yes.
is a problem, and you're really going to be stumped in growing your business because you're not going to be able to leverage any kind of capital in that regard,
Correct.
right?
Very much correct.
And I see a lot of posts in social media where people are saying, where can I get a free grant or free loan or all of this? And there's no free.
Oh, no, no. If you're relying on grants to
Yeah.
fund a small business, there's a lot of stiff competition out there. So, figure out the better way and stop
Right.
bootstrapping yourself. Build business credit.
Absolutely. And even the free grants and loans, those are really more community tied, but they want you to earn it. They want you still have to show that you're doing your business and doing stuff. So it's not like it's a free for all. People are just giving away money. That doesn't really happen. The only time that happened was during COVID.
Right. Yeah.
but, and sometimes there was a tie to that, right?
Yes.
You're
Yes.
tied
Indeed.
back. Yes.
Yeah.
I believe in the service, Andy. I think that you guys are offering something very beneficial to a lot of small businesses, and I truly do hope people take advantage of the opportunity to reach out to you, and at the very least, to have a free consult. I think to understand and know where your finances are is a good thing. And here is the other thing, because I know people are really skeptical about going to people because they're embarrassed, right? They're embarrassed.
Right.
They can have a call with you. They don't have to show themselves on Zoom, right? But at some
No.
point, you would have to dive into their
Yes.
information. So
Yes. Yeah. We do like to figure it all out so we know where we're coming from and where we need to get you to.
yeah. Yeah, but I'm sure that you guys sign NDAs or anything appropriately if they wanted you to, so you don't share that data. But
Everything's confidential.
yeah,
Yes.
yeah, yeah. So just if you don't have peace of mind, there's your peace of mind that Andy's willing to work with you. And
Mhm.
if he needs to sign an NDA or anything to suffice that, then just know that that opportunity is there. Very awesome, Andy. Do you have any success stories you want to share before we let you go?
Oh my gosh, yeah, there's a multitude. One that we reference a lot is a small trucking company. They were in business about 10 years. We're trying to get a bank loan from their bank they had been working with this entire time and just knew how successful they were. But unfortunately, their personal credit was stretched too thin. So their bank said no. Working with us within 10 months of optimizing their cash flow, trucks use a lot of fuel. So we have some phenomenal fuel cards in our platform that one actually does report to all three bureaus. So you get all your bases covered there. But in 10 months, we took them from nothing on their credit profiles to $724,200 available to them. So
Wow.
it's just I mean, there was another construction company, a small company, they worked with us, and after 12 months, they needed a new work vehicle. Went to their local dealership, said, I don't want to sign for this personally. I built this credit. Let's see what we can do. The finance manager, whoever they were working with at that dealership, ran their business credit, financed the vehicle at 1.9%.
Wow.
No personal guarantee, all on the
Wow.
corporation. Yeah.
Wow.
So it works phenomenal for the trades, any industries that are turning over equipment on the regular every couple of years. You got to trade over those vehicles. They wear down. So it's a great way to bypass that personal guarantee. I onboarded a 8-figure construction company that the owner was still signing personal guarantees. So it's you're never too big to start working with us, or never too small. I've onboarded a lot of just startups, a lot of franchises that are just starting to help refinance that SBA loan off of them personally onto the corporation. When the credit is available, we can do that. But a 15% SBA loan is not very attractive.
Right.
It's tied to you.
No.
So
And you're exactly right. You're exactly right. And a lot of times, these people that are getting SBA loans, they do work out where they're trying to refinance them, right? They'll refinance them in a year or two,
Yep.
and then maybe work them off their personal credit into the business.
Yeah,
Yeah.
exactly. It's a great
Yeah.
strategy for
Yeah.
sure.
Yeah. Yeah. Awesome. Well, I think this is this was a great conversation, Andy. And
Thank you.
I do appreciate having you on my show. And I hope people do reach out to you. We will rebroadcast this. I'm a big fan, like I said, of people understanding and knowing their numbers. And especially working with professionals who understand and know numbers as well to help guide them in the right direction.
Yes,
So
yes, indeed. Yep.
awesome. So reach out to Andy. He is open for free consultations. He's happy to chat with you. Has no problems with that. Right, Andy?
Not at all. My pleasure.
Okay. And then you want to say your last name again? Because I don't want to screw it up.
Cervenka. So think like cerveza, but
There
Cervenka.
you go. I love it. I love it. So catch Andrew on, it's going to be Andrew Cervenka on LinkedIn. He's there and he's waiting. I did put his website up. If you are able to connect with him, please do. I will also drop a link in the chat for everyone to see. And again, thank you, Andy. You have been a pleasure.
My pleasure. Thank you so much for having me. Appreciate it.
Okay. And thank you for joining me on my Stand Out and Grow podcast. I hope that this was beneficial to you. Please drop me a line. Let me know. I would love to hear back from you. And to me, this was very powerful because there's nothing more important than establishing and knowing the credit that you have for your business, but also not utilizing your personal guarantees. And that means like your house and your land or, other personal things that you might have that if you were to default, those things go away, that you no longer have those. So let's try to stop that and dig a little further and reach out to Andy to help us. Until next time, you got this.